The initial phase of our fiscal strategy has delivered on its objective, with full employment in sight. With our recovery well underway, it is now time to move to the next phase of our fiscal strategy. This will see a focus on stabilising and then reducing debt as a share of the economy, rebuilding our fiscal buffers without risking growth. Going into the election, Mr. Frydenberg will confirm that the coalition will maintain its long-held policy of capping the tax-to-GDP ratio at 23.9%. That ratio fell during the pandemic, when much of the nation was relying on JobKeeper and other assistance. The mid-year budget update released in December forecast tax receipts to remain below the 23.9% cap across the medium term, or the next 10 years. That takes into account the $19 billion a year Stage 3 cuts, which will begin on July 1, 2024. Deloitte Access Economics estimates the ratio is as high as 23.7%, and Mr. Frydenberg will say on Friday that the coalition will act as necessary to maintain the cap. This imposes a discipline on the expenditure side of the budget and is consistent with the coalition's values of cutting taxes, not increasing them, enabling Australians to keep more of what they earn, he says in the speech. Moderate measures. Despite the shift to spending restraint, he confirms that the budget will contain moderate measures to help with current cost of living pressures. The Australian Financial Review revealed on Thursday that this would most likely be in the form of one-off cash payments to pensioners, welfare recipients, and low and middle-income earners. Mr. Frydenberg appears to confirm his, saying the assistance will be targeted and proportionate, the mantra used for the emergency spending during the pandemic, which was designed to be switched off as soon as it was no longer required. The government is also keen to impress on voters the swag of measures in recent years that have helped with the cost of living, including expediting the Stage 2 tax cuts in 2020, an 8% reduction in power prices, and increased childcare spending. In the budget in less than 2 weeks' time, there will be further measures to support families to meet the cost of living pressures in a targeted and proportionate way, Mr. Frydenberg says. Otherwise, he will declare, the time for large-scale, economy-wide emergency support is over. Fiscal settings need to be normalised. He stresses that the government will control spending growth, but will not embrace austerity or cuts. Rather, it will aim to get the economy growing out of debt and deficits while maintaining essential services. A sharp and sudden tightening in the fiscal settings would likely be counterproductive, undermining the economic recovery and ultimately hurting the budget. We do not want to put at risk the hard-fought gains we have made, he says. Mr. Frydenberg alleges that Labor would have spent an extra $81 billion during the pandemic, citing its criticism of the ending of JobKeeper and a revamped wage subsidy scheme introduced for last year's Delta outbreak. As well, Labor wanted to buy Virgin Australia and spend $6 billion on vaccine incentives. Once Labor starts spending, they never know how to stop. Crisis-level economic support must not become entrenched, he says. Mr. Frydenberg first outlined the two-stage strategy as the pandemic ripped apart the economy in 2020. Initially, the aim was to end emergency spending and focus on budget repair once the unemployment rate fell sustainably below 6% to between 5.25% and 5.5%. That was subsequently recalibrated in 2021 to an unemployment rate with a 4 in front of it, and at the start of this year, Prime Minister Scott Morrison set a target rate with a 3 in front of it. With that now likely, Mr. Frydenberg says it is time to make the switch, and that $251 billion in pent-up consumer savings and a further $182 billion on business balance sheets, courtesy of the pandemic, will provide continuing fiscal support. At the same time, he warns of a volatile outlook, citing such risks as a new variant of the coronavirus and the Russian invasion of Ukraine.